G'day.
Morning, mate. How you going?
Yeah, not too bad for a Monday. Geez, a big week of reporting this week.
Yeah, mate. Very, very big. Obviously, we had some key results out last week as well, and the index tried for another record on Thursday before giving up some ground Friday.
Yeah, I've got a chart there to show in a minute, but it's just bounced off its record and dropped back down again. So I think there's a fair chance we could see it again later this week, I think.
Yeah, it'll be interesting. Obviously, a few weeks divs too that could drag the index lower. Yeah, obviously, when the div comes out, the index should drop. But anyway, let's get into it and see what we're going to talk about this week.
Right, yeah, I'll stick some slides up here just on the on a couple of them. So I'll make that a bit larger and away we go. So I've stuck CBA up there as the first one. H, do you want to talk through that one?
Yeah, look, results out just over a week ago. Performance of the stock has been pretty amazing. I think it was sort of sitting, actually, was struggling to hold $150 a share only 2 weeks ago. Sort of snuck back over it 10 days back, and then does not look back, rallying well through $170 a share. A couple of things that I noticed in the results. The numbers were pretty good. Bad and doubtful debts are very well under control. Earnings are looking solid. Dividend was lifted. The thing that is definitely worth considering for anyone looking at CBA, it's yielding under 3%. So possibly not if you're looking at it as a yield play. I certainly wouldn't think buying it at current levels represents any sort of value for you. But look, from a growth perspective and just for obviously a solid share price movement, it is seeing money come in from offshore buying it. So local investors, I don't think, are as active in it, but international money has been chasing the stock. A key thing I did notice, and comparing CBA to ANZ and Westpac that both gave quarterly updates last week, the net interest margin that CBA is earning is just over 2%, which is actually a lot better. ANZ's around 1.5% net interest margin and Westpac about 1.7 times. So it sort of starts to justify why CBA does trade at a premium. But I don't think the current premium that it's trading at is sustainable. So for me, CBA definitely is a sell. You're taking some money out of that stock. And I know that's hard because anyone who's bought it in the past probably suffer capital gains if they do sell. But I do think it's a stock you need to be looking to lighten some money out of, just taking some profits and just putting a bit of cash maybe into the other banks or just sitting on a bit of cash waiting for some other opportunities.
Yeah, I had a couple of clients lighten a little bit out of CBA last week. I mean, its average price target maximum is 155 and it's trading at 176. I think the average is 131, so it's way above any of the price targets. And as you said, the international money pushing it up, and I think there's probably better stocks out there to buy.
Yeah, very true. I think it's a bit of a safe haven for international money at the moment. So
Yeah,
that's certainly what we're seeing. That can change very quickly if things change in US politics or Trump's latest theme of the week could certainly change the desire to be out of US stock and into what would be seen as a safe global stock.
yeah,
So yeah, definitely I think local investors should be taking some money off, whether they sell some covered calls, buy some puts for some downside insurance, or sell some of their holdings down.
yeah. They're all good strategies. I've put up ANZ here as another one for a quick chat. A little bit different story, but its stock price has jumped pretty dramatically the last couple of days.
Yeah, look, it did go through $40 at one stage on Thursday after its update. As I pointed out on that net interest margin, 1.5 times, it's pretty low. I think it's the lowest out of the big four. So that's a bit of a worry. But ANZ's probably seen as a bit of a turnaround story with new senior management. And that probably is what sort of given the market a bit of a hope that there's better days for ANZ. But I think at over $40, that is a little bit too hot. So probably for me, $38 would be somewhere where I'd look at buying the stock. If it's over 40, I'd be certainly looking to lighten or sell some calls.
Yeah, if you read through the detail of the report, it was a pretty amazing report. The new CEO there's done an incredible job cost cutting. He's cut a huge amount of salaries out of there, out of that place, and people out of the place. But if you look a bit closely, there's been no growth in the business. So it's his phase one has been all cut. Phase two's got to be growth. And Commonwealth Bank
Yeah,
had quite a considerable amount of growth, whereas ANZ didn't really have any. So it's to get that sort of jump and not really show the growth for it, he's really got to prove the second part of his strategy for the next quarter, 6 months. So I think the market might have got a bit carried away here. So I'd be looking to sell calls in this one or even lighten again as well.
Yeah, definitely, and possibly a wait and see whether you do buy back into the stock, depending on how the next 6 months go.
Yeah, for sure. And the index itself's hit a bit of a tear as well.
Yeah, that was Thursday. Look, obviously with those moves in the banks, I mean, we all had saw CBA run. Rio was still very very hot. ANZ had a huge day or huge start today, Thursday morning. Westpac chased as well, as did NABs. So probably 5 or 6 key stocks really drove our index to, as I said, almost to those record highs before we saw some profit taking Friday. The index to me feels sort of over 9,000, I think, is a little bit too strong. I'm more of a thinking the index is sort of 8,900 to 8,800, sort of the fair value for our market, especially with some ex divs about to come out.
Yeah, I think you got the ex divs as well as there's been large amounts of money moving around with this reporting season. Some of it's jumped into things a little bit fast, and you can see on the technicals there, it's hit that resistance at 9,100 there a couple of times. I think buying some puts here if you were looking to protect a bit or make a bit of money on a downside, yeah, probably not a bad play.
Yeah, definitely. Mate, if I might just mention a couple of stocks that we have been speaking about a lot over our videos over time. James Hardie had a good result last week and really rocketed up. It was up about 15%, I think, on
It's
one of the
incredible.
days last week.
Incredible.
So that's been a really good call for us. Amcor's been looking really good. That's certainly pushed higher as well. And HEL, one that we sort of pushed, and it's been a bit of a tough one.
Yeah,
But had a great Thursday. I think it was up 10%
yeah.
or so, and has continued to look pretty good after results that certainly started to show that their earnings are on the right track and the business is moving in the right direction. So a couple of good calls we've made over the last 6 months.
Yeah, it's a bit of a theme there, isn't it? I think if the quality companies that reported solid results really jumped back pretty hard, and I think you'll see
Yeah,
that again this week as well.
yeah, excellent. Mate, well, it's a big week of reporting. We'll try and knock out another video on Friday, but
Sounds good.
until then, I'll talk to you.
Right, see you later. Thank you. Ciao.
Good, mate. Bye. All good, mate? All good?
I'll find the stop.